In the first video, we talked about the markets on a year-to-date basis. In this video, I quickly want to go over today's events in historical context and also provide some insight into why we're still really optimistic about the future. So first and foremost, the biggest event of the first quarter of the year was Silicone Valley Bank and Signature Bank both failing. These are two of the largest banks in the country, and as far as bank failures go, they are the second and third largest bank failures in history, dwarfing the fourth largest significantly, which was back in 1984, and only slightly below the largest bank failure in history in 2008, which was Washington Mutual. So what ended up happening was at the time of those failures, there was a ton of fear around which bank is going to be next, and there were significant impacts of potential contagion. The government came in and said that we are going to backstop all of the depositors and make everyone whole. By doing that, they essentially stopped people from panicking, and the markets remained calm. We also saw the late night merger of UBS and Credit Suisse to try to calm the European markets and generally markets as a whole. And I think in general, the governments did a pretty good job of calming fears, and we saw very, very little volatility around these events. So again, I think that we're in a relatively stable place at this point, and I don't think that the contagion will continue beyond what we've seen with these two large banks. Now, to put this in historical context, beyond simply just two banks that failed and where did other banks fail, this chart is going back to 1980. Now, we look at this chart, similar charts to this one, going back to the Great Depression, but this one is looking at specifically financial crisis bank failures in U.S. stocks since 1980. And it's interesting because these gray bars represent recessions, and each one of these little call-outs represents a major, some event that had a significant impact on the markets. So what we see here is that we can go back and look at bank failures. We can look at Orange County bankruptcy, 2008 financial crisis. In 2010, we had 157 banks fail. 2008 was the largest bank failure in history, which was Washington Mutual. And what we see here is, despite the 1987 crash, and you name the financial crisis, $100,000 invested in 1980, left invested in the S&P 500 through today, is worth $11.2 million. So again, we've seen crises before. This is not the first. It feels unique because the numbers are different, the names are different, and some of the surrounding details are different. But crises, geopolitical crises, banking crises, financial crises are kind of par for the course. We've seen those today, we've seen those yesterday, and we will continue seeing those in the future. So again, just because we have a situation today that may seem scary, historically, it has not been a reason to sell or abandon your financial plan that's based off of your long-term projections and your long-term goals. Now, the first slide was looking at financial crises. About a year ago, we were doing this presentation on geopolitics of Russia invading Ukraine, and the general theme was to similarly stay invested because invasions happen. And obviously, from a casualty event, they're horrific. But for our purposes as investment advisors, we have to look at them in the context of the stock markets and the investment portfolios. And what we see is that if we go back to World War II up through today, historically, when we're looking at 3-year time horizons, invasions, wars have not been a reason to sell based on a longer term holding period. So I updated this chart. This chart looks like this part last year, and I filled in these bottom parts for this year, which is when Russia invaded Ukraine, 1 year later, the market was down 9.46%. Where will it be 2 years down the road? That remains to be seen, but in historical context, there's only been one other time, which was World War II, when the market was still negative 3 years later. So again, there could be other new geopolitical events that get piled on top, and we restart this clock and start fresh. But ultimately, what we've seen is that we've seen attacks before. We've seen war before. We had the Korean War, Cuban Missile Crisis. We saw Russia annexes Crimea back in 2014. So whether you're concerned about China invading Taiwan or you name the geopolitical conflict that is keeping you up at night, from an investment perspective, it's something that we have to keep this historical figures in mind. Now, looking towards the future, I have a lot of clients that are very pessimistic about the world, whether it's because of politics, whether it's because of wars, whether it's because of social issues, you name it. But the reality is the world is changing and improving every day, despite what you may read, despite what you may hear, and despite what you may feel. So I like this chart here because it looks at the years technology takes to reach a quarter of the American population. So back in 1876, it took 35 years for a quarter of the population to have access to the telephone. When the computer came out, it took 16 years for a quarter of the population to have access. The World Wide Web, internet, 7 years. Facebook, 4 years. Now, starting in 2021, it took TikTok 2 years to reach a quarter of the population. So what does this mean? It means that things change more rapidly than we could ever imagine. And as things change, companies start to make lots of money. And the companies of the future are going to be companies that may not even exist today. To that point, this chart is looking at the top 5 companies of the S&P 500 in 2001, 21, and then looking at 2041, what's going to be. So in 2001, the top largest company was General Electric, followed by Microsoft, Exxon, Walmart, and Citigroup. 20 years later, Microsoft is the only one still on the list. It has been replaced by Apple, Amazon, Facebook, and Google. What does this tell us? It tells us that things can change. So when we look out at the next 20 years, we're not looking at what is, Amazon going to do. It is going to be which companies are going to replace these companies to be the largest companies in 20 years' time. They're going to be in industries and fields that may not exist today, with some of the advances in electric vehicles, in some of the medical space. There's massive advances in AI right now. So there's a lot of changes that are taking place at incredible rates of change. And so what I would like to see and what we look at is for those next opportunities, those trends that we're going to take advantage of by being invested in the stock market for the long run. So again, that's quickly what we're going to go over in our seminar. If you have questions about this or anything else, feel free to give us a call, and we'll be happy to go over it in more detail. But yeah, thanks. Talk to you later.